All right, ladies and gentlemen, I hope you had a wonderful weekend. I got another watch list for you, but we're going to do things a little different because not only do we have some of the biggest earnings, you got Apple, Amazon, Meta, Google, all of that, and that is going to be very important, but now we have Jerome Powell, and depending on what he does, I want to go over why everyone's saying it could either crash the market or why we might be starting another bull market. So I have three scenarios that I'm going to be going over of what possibly Powell could be doing tomorrow or on Wednesday. That is when we're going to hear from him, and we will have to tie it in with the earnings, but I figured we should go to the chart a little bit and see really what is up, because I got two very important things. I'm going to give them to you right now. One, not every Fed meeting in the last 12 months has been easy, and how it has played out, once I go through this chart, maybe it'll surprise you, and I just at the very least want people to be able to have a refresher. But now, two, this is this recent rally that we have been on, and quite frankly, if you zoom out and see everything else, it's really not the biggest rally compared to some of the other things we've seen in both January, March, April, coming into August. It just doesn't seem like this rally is so big, but everybody is a lot more bullish here than they have been at every other time. And honestly, there's a lot better evidence to be bullish here than not. And this is why now, whatever Powell does, we're going to go over it. It could dictate, maybe even crash the market, get people back to the lows, or it can spark a lot of optimism. So let's start with it. I'm going to get to it right here. And what I just want to show you is the chart of every Fed meeting from the beginning of the year. So the first one at the beginning of the year was January 26th. So right here, you were already coming into the lows a little bit, but you'll notice you kind of bounced around and then you popped and then you chilled out for a couple of weeks and then you started to go down again. But that was the first meeting right there. Now, the next meeting was March 16th, and what do you notice again? We were actually near the lows. You jumped up ahead of it, and then you actually rallied after that. Now, this was the beginning of everything when we first started raising rates, right? So let's jump to the next meeting, May 4th now. This was one where we were selling off into it. People were getting bearish again. I think this was on the cusp of some of the earnings as well. And then you dropped, but then like what? Within 2-3 weeks, you're pretty much at the same level. And then you had another drop. But what I want you to notice here, this isn't Fed related except until we get like to the middle of it at the low, June 15th. That's when you had another Fed meeting. You dropped a little bit, and then before you know it, you're back up again. And then July 27th, right here, this was was this the most hated rally? I think it was, or no, was that over here in August? But this rally was absolutely big. But again, this was another Fed meeting, and then 9/21, September 21st, that's when we started to drop, and before that, that is Jackson Hole right here. But surprisingly, if you see what I've shown you right now, you didn't really start dropping till later half of the year after all of these Fed meetings, and then we go into November 2nd. This one was right around here, I believe. You had a drop a couple days later. You're rallying up again, and then December 14th, that was now the whole one we just dealt with, and then we dropped, and then sure enough, we are right back here. So hopefully the last year has shown you, what can possibly happen. And like I'm saying, this is going to be a big meeting for Powell, but when we look at the history of all of them, usually we're ending up at the same place a couple of weeks later, and sometimes Powell kind of creates a bottoming effect. So this is what we got to be cautious for. I now have the scenarios that can occur, but now let me give you just one big thing or one more important thing, and it has to do with the financial conditions. So this right here is the U.S. financial conditions, and what I have circled here was in August and September, and this is where at the meeting they were like, no, we do not like this unwarranted easing of financial conditions. Powell really came to, hit the hammer with it. But the point is now, when you look at these financial conditions, we are actually at the same financial conditions towards the beginning of the year, or beginning of last year when we started. So although there's going to be a couple of things that could happen, I am really thinking this will arguably be the most important thing that we got to be monitoring. And then depending on how it plays out, every other time you just see it is very quick for these financial conditions to come right back up, just like we've seen with the market. And that period where you kind of watch the market drop in between Fed meetings, the financial conditions did stay depressed, more so where we are entering in a period where they have pretty much been easing since September. So hopefully this makes some sense to you, or hopefully this is at least getting you some of the rear view mirror to actually see what we've dealt with. But now this week, we got a couple of scenarios. It's going to get crazy. We have plays in earnings, so I'm going to get into it. So like the video if you like it so far. Make sure you're subscribed, and hopefully we see you on stream. But let's get to the scenarios now, baby. Run it.
Working to the couch, it's the 2020 less. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Oh, and I almost forgot. It's Sunday. Tomorrow is Monday. If you want to help out, this is a little challenge that we got going on. It is the random account generator. So what we ask on this watch list, post a random option trade below in the comments. We are going to randomly pick it tomorrow. Keep it below $100. Strike price, expiration date, all of that. And we're going to see the performance. We've actually done good in these last couple of weeks. Y'all been starting off January strong, just as the market has been. But right off the bat now, let's talk about what Powell can actually be doing. I have 3 scenarios, and I have ordered them in the likelihood that I believe they will occur. Now, this is just my opinion. I'm not a financial advisor. None of this is a recommendation. Options trading, some again, lose most financial advisors, lose no financial advisor. I can show no purpose, only thank you for one day. So you already know that, right? But number one, Powell comes in and he beats us with a stick just like he has done at the last 3 meetings. So there was also Jackson Hole, and even when I go back to the chart a little bit, like right here was Jackson Hole, and then the Fed meeting came afterwards. So this isn't uncommon, and you'll see when I go over the rest of the theories, there is a chance. And like I've showed you, a lot of these Fed meetings, man, they have led to a bottom more or less, and it's not really what you would have expected. You know, the last time even too, if you remember the December meeting, the market actually closed pretty solidly green and then continued down, but then sure enough, a couple of weeks later, you see how it reacts. So one factor that we really got to consider is that whatever happens on Wednesday, yes, you got to follow it up there with the earnings, but you may even get a Powell or other Fed speaker follow-up, which could help dictate the rest of the move. But what I'm trying to tell you is that we have seen this many, many times, and when I go back and show you the financial conditions there, they have already eased up a lot, and it does not seem like this is what Powell wants, even on the PCE. If you guys remember that, I showed you this chart. This was rent excluding shelter costs, or core services excluding shelter, and Powell even said they want to see this thing come down. At the last CPI, even though people were feeling optimistic about it, that didn't come down. So this is why I'm thinking that Powell is going to come in. He's going to step up the hawkish language to try to tighten financial conditions, and then boom, the rally is over. That is where people are saying we are going to crash. This is what people mean by the market is going to crash. They believe Powell is going to come in. He is really going to come in with a sour tone. That's going to bring things down, and then the cherry on top will be if you get earnings from the big tech pretty much just as bad as what you saw with Intel just right this last week. So that is scenario 1. I do believe it is the most likely. However, one thing we've been talking about is I respect both sides. And again, I can't tell you enough here. This is the smallest rally out of any of these that we have seen. However, this has been the most bullish in a weird way, and that's because this time around, you actually have 3-month, 6-month inflation coming down. You've actually gone through a year. Earnings have declined, but now it's not like they're getting worse, and that's what we are waiting here with the earnings season. So that's what I believe is the first scenario, and we'll see. But now number 2, this is also why I respect the bulls. This is what I think is the second most probable, in my opinion, is that Powell comes in hawkish and disapproving. However, how much more hawkish can Powell get than he already has been? That's the real question. The only thing borderline that Powell can do that would be more hawkish is if he breaks the trend of the Fed futures over the last 60 years. And even though the Fed futures are pricing in a quarter basis point, he says, nah, screw it, and goes to 50. So I don't know how much more hawkish he could get. And if that occurs where he comes in hawkish and it kind of just sounds the same, and he's like, no, we're going to keep rates higher for longer. No, we're going to do this. No. But then the market pretty much calls his bluff and still just eats off of it, oh my gosh, that would be a crazy scenario, but I do think this is actually the second most probable, and then it would require some of that stuff I've just shared with you where Powell would have to come in at a later moment or any other Fed speakers, and then they would kind of have to jawbone it down afterwards, or the market won't come down until there is really bad earnings or there is really, really just a new surprise event in terms of the data. So that is scenario 2, and then finally, scenario number 3 is that Powell actually acknowledges that things have gotten much better, and then he says something along the lines of the odds of a soft landing have dramatically increased, aka he gives his seal of approval and says, you know what, actually, based on the data, we were expecting inflation to come down, but this is looking a lot better than we have expected, and we actually believe we're going to get a soft landing. And he's just kind of saying, yeah, we're going to still keep rates up here just to be sure, but pretty much Powell comes in sounding more dovish than ever in the last year, and then definitely more than people expected because this isn't really expected to happen. So I have this as the least likely probability, just considering how things can flare up and just this dramatic, consistent nature Powell has kept over the last year. But if this does happen, that would lead to some upside. So pretty much there's one scenario where the market gets absolutely clapped. That is number 1. And then the other 2, the market finds a way to go up. But in scenario number 2, I do think it would have a follow-up with earnings, or Powell and other Fed members or data find a way to bring this thing down again. So that is what I think is what could happen this week. Obviously, things can change in the meantime, but now this is super important because, like I'm saying, people have a reason to be bullish, and if those hopes get dashed, I mean, we are not that far from the lows and everything. People are talking about recession in 2023 and all of that. That's where this starts to get really important. And now, depending on what those earnings do, it could get very crazy. So, Chad, I hope this helps out. Let me know if you have any questions, anything to add on. Let me know if you like this style too. I feel like this week we're going to get a little bit more focused, and I'm going to dive a little deeper into this. There's even a lot of stuff on the charts, the momentum. And again, I mean, I should have probably added that from the beginning. We are above that yearly downtrend line too. So there's a lot of things people are looking at. Don't even forget about Young Bondland too. We got to bring him up because the bonds are also going to be very, very pivotal this week, and where they go and how they respond to Powell, I mean, it could do a lot as well too. So let me know what you think, but don't worry, baby. We still got some more moves, so let us get into the plays. But right off the bat, I actually have 3 plays. We'll go over some of the plays I made on Friday. OXY and XOM, these are going to be the first ones. I'm still holding my OXY play. Don't forget about that Chevron buyback news that we had the other day. But Chevron's earnings wasn't too hot, but we are going to be getting XOM and a bunch of other oil companies. Just not to mention, this week will be the biggest week for earnings out there, and then the big tech and all of that. So we'll see what happens. But like I'm saying, in the context of Powell, we may see a lot of commodity moves, given the fact that Powell is related to this whole soft landing, hard landing, and all these potential things that could happen, inflation surging up again, and commodities, energy, food. It will be important. So these are going to be one that I'm going to be watching. I do think their own individual earnings will have a bigger effect, so watch out for that. I'm still in my OXY shares. Then play number 2. This one is related to earnings, but they're going to be a little bit later. But now Qualcomm and NVDA, I think Qualcomm is going to be there on Thursday, and I think earnings is definitely going to dominate. But now we are ending the Chinese Lunar New Year. That China reopening now, it's probably going to come in more into focus. So we want to see how these chip companies do, because they have a lot of overseas exposure. But now the China chip ban, people are talking about it a little bit more. You got to hear from ASML and the Netherlands and all of that. ASML said it won't be a material effect on their earnings, but some companies like Qualcomm and Micron, they have more exposure. Some people are talking about NVIDIA's exposure as well. But tie this into earnings, I think it's going to be a really important one. So keep your eyes out for that, especially with the China news. And then play number 3. We're going global again, baby. INDA. This is the India ETF. And really, if you haven't heard about it, there's the richest man in India, Adani. And I forgot, was it Muddy Waters, or I forgot who it was. Somebody wrote a really, really scathing short report on it, and it led to like a $50 billion loss. And quite frankly, a lot of people are talking about this now, and it's actually had a much larger effect on the Indian economy than not. So keep an eye on this ETF. If there's any major developments, this will be a great one to follow along there with the news. So watch out for them. And then actually, I got one more play for you, baby. Apple, Amazon, Google, and Meta, baby. It's earnings season. There's going to be pre-earnings run-ups. I'm already in Apple. I'm already in Amazon. I think Google and Meta, those are going to be big. I'm still bearish on Meta as well, even though it has been squeezing me. And then here's a fun fact. On Tuesday, Snapchat reports, and in a weird way or a weird world, we have seen Snapchat affect all of these companies dramatically. So this is going to be something to watch out for, but these are going to be both plays to make ahead of time, and then afterwards, these can change the dynamic there of everything this week. And then just don't forget, a lot of them are going to be reporting the day after Powell. Meta is the same day as Powell, but then I think Apple and Amazon, maybe even Google, they're all the same day or the day after Powell. So we're going to see. And then, like I showed you from the beginning, all of these follow-ups there are the days after the Fed meetings. That's when things really, really get crazy. So we're going to see what happens. As far as everything else, I'm pretty much just holding the same plays. On Friday, we flipped Sherwin-Williams for like $50. No. It's Schwab. It's not Sherwin. I keep saying that, but watch out for some of them. IBKR and Schwab, they had these weird movements on Friday, made some quick flips. We played the Intel. Remember, I did that short there, and we shorted it on the way down, and then everything was kind of looking bullish on Friday. I wanted to short it, but then I went for the upside, so we had nice dollar per share flips, but we did it on different size, and this was a big thing we talked about on stream. Just controlling your sizing can take you very far, especially in some of these volatile markets and leading into Powell. But there was that play. Then we closed out of the AXP. We actually got $13 a share. It was about a $1,300 net profit. They killed it on earnings, so that was a nice W. And then pretty much everything else, all nice. We got the plays up here. Still in the ES. I'm now up $2,000, but down $24,000 on the NQ. But like I was saying, this combined shouldn't get more than $20,000 now, like we discussed, but we'll see. And before Powell, my plan, if I'm feeling it, I may wait during the meeting, but I'm probably going to close out the ES and then ride this. If scenario one comes true, that is where it's going to be. But like I've showed you, if the other two scenarios play about, then if I close out of this for a small profit and don't make as much, that could put me in a precarious scenario. Still going to be riding out the bonds. I think this is actually going to be the final test. I told you that top point a couple days ago. Well, after Powell, that will really be the top, or the bonds are going to come roaring back again. There's my Amazon pre-earnings. We made a Broadcom play. I'm still in that one there. We're going to see how that one plays out. It was a oh, you can't even, can you guys not even see that? I didn't even know you could see that here. Hold on, wait, hold on. Oh, no, okay, I can't get it. I got it. Is this weird now? I think it's again. Oh, my, it did it again. There you go. I just had to take my time with that. I had to slow it down. But Broadcom, that was pre-Intel, so 25 shares, very, very small. Then there's the Oxy that we're up on, and then the Meta. I think I'm going to hold this one to earnings. I'm down $1,900. I do want to average down on it, but that's why I'm saying strategically, I'll just wait a little bit. Even if pretty much if the earnings is bad, I think this will come down tremendously, and we'll be able to get our money back. Otherwise, if it does shoot up against me, I could use that to average, but most likely I will want to get out of it. So we're going to see what happens there. But other than that, I think we're going to have a lot of plays this week, a lot of movement, maybe a lot more day trades because of Powell, and it's going to be a wild one, and it may be one for the history books. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, it's not about how fast you go. It's about how far. We've got 1 month in the books of this year. You see everything going on. You need that stamina. You need that endurance. You're running the race so well. So don't give it all up, and make sure you use real risk management in all areas. And this game is more than just a one-trick pony, baby, but you're prepared. You're ready. Get that longevity. And Chad, I hope you're ready for another amazing week. But I love you. I will see you in the morning. Drink the water. And goodbye. Horn.